I'm testing algo trading strategies. I'm champion trader Kevin Davey, and let's get started. In today's test, I'm going to test a calendar-based entry and exit strategy. It's a little bit different than what I normally do, but I thought it would be interesting to do this one. First off, if you haven't subscribed to my channel already, please do so and leave a comment. If there's a strategy you want to test, let me know. Maybe I'll test it in a future video. Let's get to the description of this. The basics of this system are that it goes long towards the end of the month, and at the start of every new month it goes short, and in the middle of the month it's flat. Now obviously when it goes long, that's going to be something we're going to play around with, and when it goes flat, we're going to play around with that, and we're going to play around with it via optimization. And there's a thought behind this. I like to have a thought behind what I'm doing and the systems that I'm trying. I don't like to just randomly throw stuff together, although sometimes I do that. But what I normally like to do is have an idea and say, hey, this kind of makes sense. Maybe I'll test it. The thought here is maybe people who are professionally managing money or central banks or whoever are making decisions that will affect their performance or their performance numbers, or they balance the books, or they want to show that they have certain investments on record at the end of months, and so they do certain things that are more like housekeeping rather than trading to make money. Maybe they just want to look good to their investors, for example, and so people might make some portfolio decisions based on that. And so that's what this system supposedly is going to take care of or take advantage of. Now the rules, we're going to enter long mid to late in the month, and we're going to enter short, so we're going to reverse that long and go short at the start of a new month. And we're going to be short just that early part of the month, and at some point we're just going to exit the short. We're not going to go long, we're going to just go flat, and then we're going to be flat until the next time we have to go long. Now obviously something that comes to mind is this is just the way I set it up. You could do the exact opposite. Maybe you go short towards the end of the month, and when a new month hits you go long. It's something to test, and that's kind of why I wanted to explain these rules like this, because you can take these rules and twist them and do all sorts of things to them, and you might be able to come up with a very good trading algo for this. You got to give it a try. Tradestation Code for this one, especially compared to other ones, are pretty simple. There's two inputs, and it says if the day of the month is a certain day or greater than, so it's going to be the first day after, say, the 20th of the month, then buy the next bar. And then if I have the input variable 2 at 5, I say if the date, that'll come later, the input variable 2, but if the date for the current bar is different than the date of the last bar, month-wise, meaning the month changed, that's when I'm selling short. So it's actually going to wait till that first bar of the new month, and then it's going to go short at the open of that second bar of that new month. And then that input variable 2 comes into play, where I'm going to hold until the day of the month gets greater than 5. Then I buy to cover. And again, I'm going to vary input variable 1 and 2. You can see it just goes off days of the month, calendar days. It's not like business day of the month or that kind of thing. I just try to keep it simple. You could do that too. It would just be a little more complicated code-wise. So if the 5th, for example, falls on a weekend, then it will wait until the 6th or the 7th, or whenever that first weekday is, and that's when it will then say, oh, okay, now I'll buy it to cover the next bar. That's pretty much it. Pretty simple. Two variables, and I'm going to make my buy date anywhere in the last week of the month. Okay, the 24th to the 31st. And I realize if it's the 31st, there's going to be certain months that don't get long signals. Okay. And for this test, I just said, forget it. We'll just go with it. You could actually write something in code to say, well, hey, don't even test the 31st of February. You know, there is no 31. What's the point? It's never going to go long. You could do that. I didn't for this case. And then the short exit date goes from 1 to 10. At the very worst case, you're pretty much going to be flat from the 11th through the 23rd of every month, so almost half the month. And it might be longer depending how this works out. With this, there's two optimized inputs that I'm going to do, and I'm going to run through walk-forward testing, and 80 total iterations. Now, you might say, well, where did this idea come from? I get ideas from all different kinds of sources. Magazines, books. This one just kind of came from my brain. I was just kind of thinking about things. I probably read something on the internet where it said money managers like to window dressing their books to look good, and so maybe that came from there. I don't know. A lot of my students use the Strategy Factory Club that they're all a part of to get their own ideas. So they get ideas from other students and then go and modify them and create their own strategies. So there's a ton of sources for ideas. And I talk about this in my course, but the thing you got to realize are ideas are pretty cheap. What's really important is how you test those ideas. And speaking of which, the first thing I do is I run a 2-month test, a 2-year test, I'm sorry. And in this particular case, there were 78 different combinations of market and bar size that had profitable results over all those iterations. So even if I tried it the 24th, the 25th, the 26th, maybe this system was profitable for all those cases. That's kind of what I'm looking for. It's a robustness. What you don't want is out of those 80 iterations for one to be profitable, because that's just not going to hold up in real time. You want a whole bunch of them to be profitable, and that's what this test kind of does. Here's some walk-forward results. This is the 30-year U.S. Treasuries. 1440 minute bar, which is also like a daily bar. It's a little bit different than a daily bar, though, in Tradestation, even though it's the same time period, and it has to do with how Tradestation calculates or includes the settlement price in the data. And if you're just like, whoa, what is he talking about? This is something I talk about in my class. It's an important little distinction. But 1440 minute bars, this is what it looks like for the U.S. Treasury bonds. And then here's one. This is unleaded gas. It looked really good up until about 2018. Then it's kind of been sideways since then. Not bad. What you want to avoid, obviously, are curves that just go south and head back to zero. So maybe this one, there's some potential, and it could be making new highs in the next year. Going up is always great, but going flat isn't necessarily a bad thing for some periods of time. Those are just some examples of walk forward. Then if I look at what I call trading potential, I look at the last 15 years run walk forward tests. So this kind of takes a little while. There's 12 combinations that have what I say are results worthy of further investigation. And you can see most of them are interest rates. There's that unleaded gas. There's also a couple unleaded gas. There's a couple British pound stuck in there, and the rest seem to be interest rates. Again, as I always say in these videos, this is not fully tested and approved by me strategy. So, this is a starting point. This would hopefully get you going on testing something, and at least you can say, well, hey, maybe there's some merit to this. Kevin did some testing, but I'm going to go and do my own testing. That's what I always recommend. I think the idea is fairly sound. Whether or not you come out with an algo with it after you do all the testing, maybe, maybe not. It's hard. Hard to come up with good algos. But again, the key with all this is doing proper testing. And if you don't do that, you're never going to get anywhere. So learn how to test properly for yourself. That's important. If you like this video, please give it a thumbs up. This series of algo strategies has been doing really well, so I'll continue to keep doing them. And don't forget, go back and look in my archives. You'll find a bunch of other systems that I've tested, and hopefully that will help you with some of your algo system development. Thanks for watching. I'm Kevin Davey. Have a great day.